And this is the Mortgage Show, brought to you by Cannect. Yes, this hour, Marcus Severus. He is an economist with a background in investment banking. Now, he began brokering mortgages about 20 years ago, and he's grown Cannect into Canada's top independent mortgage brokerage. A bit about Cannect, completely vertically integrated brokerage and mortgage lender, helping thousands of Canadians secure billions of dollars in funding. Also joined by Justin Turner. Justin with close to a decade of experience in customer service and sales in various fields. And Matthew Scanlon, customer service rep with Cannect, specializes in finding low-cost solutions to get clients out of debt and back on track with their credit report. Gentlemen, good afternoon.
Hi, Ian.
It is great to have you folks here. I would like to
Ian,
start before we get
I wouldn't be anywhere else. I wouldn't be anywhere.
Oh, well, there you go. See, that's nice. We're going to talk about refinancing your mortgage this hour, but before we get into that, one of the things that has stuck with me over the weeks of us doing these shows, and I think it's really, really important, especially for new listeners just tuning in for the first time to understand, is not just how excited you are about helping listeners get the best mortgage, but also how excited you are when it comes to finding them ways to save money and then reinvesting that money so that not only do they get a great mortgage, but their financial future is improved by getting that great mortgage.
The genesis of our business is our customers, right? Like it's that we were created by the trust of our customers. So if you stake your growth on the success of your customers, anybody who's looking to start a business out there, you stake everything on your customers and give them as much as you can, and trust me, you'll get it back. It might take a little bit at the start,
but there's so many other alternatives out there that we hear about all the time where, they'll get you the mortgage, we'll set you up, we'll help you. Yours is the first conversation I've ever had in that area where you guys have explained how, if you can save someone $10,000 a year, you can also show them how to invest either part of it or all of it, so that not only are they getting a better mortgage, but they're leading to better financial security by doing that. I think that's really important. I was thinking about it during the week.
I think you're right. Ian, I think you're right. This is Matt speaking. So I just want to say I think you're right, and because I'm a bit of an investor myself, and I think that you've hit on something correct there. But I think it's also about investing comes at a certain time. People think that you're going to invest and you're going to make this great investment, this genius decision. You're going to get into Google in 97 or Amazon in 2000, and it's going to happen overnight. But literally, that has taken. Overnight success doesn't. It takes 20 years. That's the truth. In investments and in opportunities like that, and the truth is, it's about saving somebody money. And if you were able, like $10,000 seems like a lot to have in pocket, but spread that out over a year, and are you able to actually come up with that investment opportunity? Are you able to actually come up with $10,000 in pocket, or are you putting that to better groceries and maybe putting your kid into hockey for a season? And these pockets of money that you keep month to month. I think that is what helps a Canadian better than an investment, because unless you have that money to actually invest and wait for that return, it's about that month to month to me. And as being a person that will take a gamble and risk for an investment, for me, it's really about watching other people. They can't make those same moves. It's about keeping money in their pocket month to month. How do you do that?
I was mentioning earlier about a Financial Post article from a couple of days ago talking about people who they're really facing some financial pressures right now. Everything is more expensive from taking care of the house to gas to everything else. And therefore, if someone can contact you, and today, like I said, let's get right into it, because today we're going to be talking about refinancing your mortgage. So pretty much any time you want to renegotiate the terms of your mortgage, it's going to be termed as a refinance. Now, we can talk about examples of that, but the reality is that there's a good chance that if someone is out there right now, they're paying their mortgage And they're also complaining about just how much money life costs right now. There's a great chance that they might be able to, that they can call you and you might be able to really help them out, where all of a sudden, as you just said, they have money that that wasn't available to them before.
About 6 months ago, we put a report out and we said, inflation's on its way. Inflation's coming. And as much as we hear from the Bank of Canada on a monetary policy basis that we shouldn't worry about inflation, it has to be a concern.
Sure we should.
And we're seeing a massive asset price inflation right now. We're seeing housing prices increase. We're seeing Canadians take on more debt. And the best way to prepare yourself for what's happening is to reduce your cost of capital. Like it's like going into battle without armor. Ensure that your mortgage is in the money. Ensure that the interest rate that you're paying isn't above market, because the longer you wait, the more of your after-tax dollars that you're expending on servicing your debt, the more of a disservice you're doing to yourself. And the opportunity to lock in to low interest rates is not going to be here forever. Interest rates are going up. I mean, like, we're answering calls constantly, 7 days a week. I mean, Justin's going to hate me if I say 24 hours a day, but pretty close. Like,
the website's open 24 hours a day.
Yeah,
the website's open 24 hours a day.
Marcus, isn't it true though that I think there's a lot of misunderstanding out there about refinancing mortgages, and the government did not help with that. There's a lot of people are terrified to refinance their mortgage because they hear all kinds of horror stories about how it's going to be at a different rate, and we have to do this and we have to do that. And the reality is, there's nobody forcing you to refinance, but you should at least understand what the options are out there.
Like when you say the government's telling us to do something, when you hear any speech that's geared towards all of Canada, you cannot automatically assume that they're speaking to you. As a Canadian, you have to realize that you are an individual. Like, your financial situation, the cost of your debt, your relationship with your bank, all of this is your own. So there was an article in the Financial Post yesterday. It talked about how Canadian household debt has increased to $1.6 trillion. Sure, household debt's increased. But if we were to isolate who is using capital right now from their household in order to live, in order to get past a really difficult time, you're sitting there right now, you're listening to this radio show, and you're thinking to yourself, like, how do I fit into this? Listen, if you suspect that you're paying too much on your mortgage, if you suspect that your interest rate is too high, if you suspect that maybe you're carrying credit card debt for too long, you have to find someone that's going to advise you on this. And if you don't, the longer you wait, the more profits the people that are charging you interest will make, and the less you're going to have. And this period of time, the monetary and fiscal stimulus that are being injected into our economy are meant to help Canadians. So if you wait, if you sit back and assume that when the Minister of Finance speaks, that they're speaking to you, you're doing yourself a disservice.
Isn't it fair, though, Matthew, to suggest that there's a lot of people? It's funny, I mentioned it during the show last week. There's people that'll sit on hold for an hour and a half over $16 on their phone bill. And yet, when it comes to even considering refinancing their mortgage, they won't start the conversation because they don't know what's involved. They have no idea. Many of them, I don't think, would know how to take the first step. And we touched on this a week ago also. Some of them are, I've been with the bank for the last 45 years. They've got my best interests at heart.
You're right, and I think that what happens is that people are intimidated about negotiating the biggest purchase of their life. They think a lot of people maybe only like go through the purchase one time in their life, maybe twice, and then they only go through the purchase process. They don't go to renegotiate their contract. They don't go to see what the refinancing could be or what it looks like if they stretch out their amortization. There's all these different things that going into negotiating a contract that big is going to seem intimidating, especially if you're going into your bank. Your bank they're not going to tell you that there's a better option across the street. They're not going to. They always have their own interest at heart, and who can blame them? I mean, like, that's their jobs. That's what they're going to do. Our job is to make sure that you get that option across the street. You get all the options on the street. That's the job of the brokerage, is to go out there and broker these deals. And so getting that past that scary part of brokering, that like, you shouldn't be brokering your own deal. You should not be negotiating your contract with a bank. You should allow people that are trained in this to do this.
Matthew, just before the break, you brought up a great point, and that is this reluctance of people. We're talking about renegotiating mortgages, and I was just thinking during the break, I do an awful lot of legal shows with lawyers. There's so many of the callers mentioned that they don't want to go to court. They're scared of what that would involve. And the conversation comes down to that's the lawyer's job. That's our job. We take care of that. You don't need to worry about that. The minute you pick up the phone and get us involved, we take over. We guide you through the process. So I think there's a lot I know there's a lot of misunderstanding about what's involved in the process right from the point where they pick up the call.
You raised a good point there, and I think that there's a culture around lawyers. You know what I mean? Like, if you're going to go to court, there's never been a movie about a hero mortgage broker. Like, that's just never happened, right? Like, there's just never. Maybe it will be about Connect, right? Like, it's just never happened.
Not yet,
like,
Matt.
Not yet. But we could change that, right? We could change that. But nobody really knows that we exist in this culture. Everybody wants to buy a home. Everybody thinks that you just go to the bank. People don't even realize that there's these alternative measures and that you're like, let's just, for an example, like, I mean, in order for you to get qualified for like a new home, if you want to put less than 5% or less than 20% down, you're limited to taking this mortgage insurance, and that you're limited to taking a 25-year amortization. Well, let's say after like 20 or 5 years, you end up paying a big chunk of that house down. Let's say you paid a lot of it down. Maybe you've paid it down to, there's 30% of the equity now left in there. What can you do now? Like, maybe you can go back to your broker, maybe even before that, 20% of the equity in there. You can ask the broker to switch it from 20 years to 30 years on your amortization. And you're like, well, why would I do that? Why would I take longer to pay off my house? Well, like I said, it's about putting that money back in your pocket month to month. If talking to a mortgage broker, your bank is not going to offer you to do that. Like, this is what I mean. A refinance is a legal term for renegotiating this contract. It's a refinance. Your bank is not just going to offer that to you. You already have a contract with them. This is the contract that is in place. You can break that contract. There's going to be a penalty associated with that. How do you get around these things? When is the best time to renegotiate that contract?
Matt, I'll tell you something. The best time to bring this up with your bank is the moment you say, I found a better deal somewhere else. And that's the moment that your bank will come to you and say, well, guess what?
We want to
keep your business. Yeah, and you know what? We're going to bend over backwards because we don't want to lose your business. So for anyone out there that's listening right now that thinks that refinancing their mortgage is difficult, because guess what? It's not a slam dunk. Like, you're going to have to put paperwork together. You're going to have to go through quite a bit. I mean, we make it as easy as possible. We got a ton of automation. Like, we're doing our best to make this as easy as possible. But we also understand that we're going to help you negotiate with your bank. In most cases, we're going to get you a better deal from your bank. You're not going to pay a penalty. You're just going to get the same mortgage that you have already, only at a lower interest rate. Because
Marcus, is it a
your bank,
Canadian
and
thing though, where people are just reluctant to play one off the other? I mean, honestly, my hunch is that if we were having this conversation in the States right now, there'd be somebody sitting there going, I'm not going to leave 25 grand on the table just to be nice to my bank. And
Yeah.
yet I get the impression up here that people are reluctant to do the, yeah, I'm going to go out and find another offer, but it's only so that I can go to my bank and get a better offer kind of process.
I just think that you haven't been a mortgage broker.
See that
no,
again?
listen, no. Go for it.
I was just saying, I
listen.
just don't think you've lived a day as a mortgage broker to see it happen.
In the United States, when I first started in this business, everyone said that the market in the United States is 10 to 15 years more evolved than the market in Canada. One of the things that is different, very different about the mortgage market between Canada and the United States is competition. The other thing is that Canada has partially amortized mortgages and the United States does not. So in the United States, you would get a mortgage for 25 to 30 years and you would get that mortgage right off the bat. And it wouldn't cost you anything to break that mortgage. There are some restrictions from the insurance companies, which are governed by the government, which affect how you might be able to refinance that mortgage within 12 to 18 or 24 months of receiving that mortgage. In Canada, we have penalties. We have big penalties. But every bank in the entire world is now faced with the exact same problem, and that problem is yield. There is no yield out in the market right now. There is a ton of money flooding the market, and we spoke about this last episode. And Canadians need to understand this, right? Like, if I was to there is a policy, the Federal Reserve in the United States, the Bank of Canada here, they have tools. Their tools are monetary policy, fiscal policy, and speech. And before they move, they speak. And right now, what they're doing is they're speaking. They're speaking through articles disclosed in the Financial Post. They're speaking through their consistent communique that they're releasing, and they're speaking in backroom channels to the banks. And when they speak, they're saying, we understand that we're allowing capital to flow out of the Bank of Canada at really, really reduced cost right now. But we want you, as the banks, to prevent Canadians as much as you can from overloading on that debt.
Mm-hmm.
And you know what? It's incumbent upon every single Canadian to decide how they believe that debt will help them. So if you want to refinance your house every 6 months to go on a vacation, stop. But if you lost your job and you need to cover your expenses and you need to pay off a high interest rate line of credit, do not allow a bank or the government to tell you what you can or cannot do with the equity that you've built up in your home.
Great
And at a
point.
moment like this, when you can refinance your house at sub 2% interest, why would you, as a Canadian who might have an opportunity to invest, why would you ignore that access to capital when your government and pension funds and mutual funds and all of these entities that we're being told are far more intelligent than us are doing that exact same thing?
Yep. You're exactly right, Marcus.
That's a fantastic point.
It's what smart money is
Absolutely.
doing right now. It's smart money is borrowing so that they can buy assets, not liabilities. Don't
But we go
refinance
through
to
this
go
in
on
tax
we are
time also,
experiencing-
Matthew.
Hey, guys.
Every tax.
We are experiencing one of the largest inflationary periods for assets. So if you want to sit back and watch how this plays out, you're going to get left behind. What we're watching right now is a flood of capital. We watched the Canadian debt increase from $1 trillion to $2 trillion in the space of 11 years. This is unprecedented. What's happening in the United States is even more pronounced. So if you want to sit back and say, well, I'm going to listen to the Canadian government. I'm going to pay attention to what they're telling me. I'm going to lump myself in with the rest of Canadians. You might miss out on a way to help you and your family, right? Like, you're seeing your house price increase. That might not happen for much longer. If I was to give any piece of advice, and I keep saying this, you have to treat your household as a business. You have to look at what you've built so far. You've got a house. That house has increased in value. If you were a business, you would leverage that home. You would utilize low-cost capital to create additional sources of income. And it's not readily available, and for sure, information is tight. But if you can find the right trusted advisor, it does not have to be us. It's
You know what, Marcus? Just before the break, you were talking about we're talking about renewing mortgages, and it jumped to mind. Every year around tax time, there are people who work hard every day they give it. They every single day, and they get their T4s and they submit what the taxes that they're owed are, and that's it. And they don't take advantage of any government programs. They don't, there's no RRSP. There's nothing. They pretty much do exactly what they do every year, and just, here's the amount of money, send it to Ottawa and be done with it. There's also people out there, and I've talked to them, who don't understand that the government are giving them these benefits. All they have to do is actively take advantage of them. For some reason, they seem to think that, unless they just, pay what's due and move on, then they're cheating or doing something wrong. And I feel the same way when we talk about renegotiating the mortgages. There's an idea out there that, I'll just let things go the way they are because I'm sure that they're the best that they can be. And as you were saying during the last segment, they're leaving thousands and thousands of dollars on the table.
Well, first off, government benefits are not necessarily meant to be like, when they're provided, they're not necessarily meant to be utilized. It's incumbent upon the Canadian to understand them and utilize them on their own. They're utilized to create votes for the government. So if you support a government, you support them because you like what their platform is. And in Canada, Canadians are quite pliable, and that goes to their relationships with their banks. And I mean, listen, it's really common for us to hear that, I don't want to offend my bank. I I guarantee you that we'll get a bunch of phone calls after the show, and people will say, I just want to find out what the lowest rate is, and then I want to go back to my bank and I want to let them know. And that's okay. It's okay to be a little bit trepid around this situation. It's okay to be a little bit fearful, but what Canadians have to understand is your bank is just a company that you have a relationship with. They happen to be a really powerful company. They happen to be a company that is very capable of lobbying the federal government, and their relationship with you needs to be viewed as a business that is supporting you. And the moment you, as a Canadian, feel that you're not receiving the best service or the best price for what you're getting from that bank, you need to look elsewhere. And has anyone watched a bank commercial recently? Like, Connect, when we're advertising online or on the radio, we're talking about what our price is. Banks don't talk about what their price is. They don't talk about what the price of your savings account is.
That's
true. They don't talk about what the cost of your mortgage is. They do that because their voice is so powerful. It's so overwhelming. Like, Connect, to put it in perspective, Connect is worth very likely 1/100th% of half of any Canadian bank. You know what? Probably 1/1000th of a percent. But we try to get a message out to the Canadian consumer. It gets drowned out. I'll put it to you this way. When I first started Connect, I tried to put offices in the downtown core, in the underground. Do you know what happened? I couldn't do it because the relationships that the banks had with the major property managers in Canada prevented me from opening offices in the downtown core because the relationships were so strong. So Canadians have to think, like, why is it that their banks communicate with them in a specific way? Have you ever received a letter from your bank that said, we found a way to save you money so that you can pay less?
Yeah, it's the line right below. We're raising your fees.
Yeah, I mean, I get the same letters that everyone listening gets. My savings account has increased. My cost for wire fee is increased. Everything's increasing. The only communication that Connect will ever have with its borrowers is to say, we've identified a way that you can save money. So we need to start thinking about our relationship with our bank in a different way. We need to start thinking about it as something that is competitive. It's a marketplace. Your business is valuable. And no time like now, when every single Canadian bank is clamoring for yield. They require your mortgage. They need your yield. They leverage it. They take capital from the Bank of Canada. They take your savings and they leverage it up and then they lend it back to you. And they need your mortgage. So let's let them fight for that mortgage.
I'll share a story here. Part of my job is to just call up old clients, remind them that, your upcoming renewal is coming. Justin's going to be in touch with you. Our underwriter's going to be in touch with you and get the process started, right? A couple of weeks ago, I called up an old client who was coming up for renewal just to give him a heads up so that we could get this ball rolling. He called me back about 5 minutes later and said he was thinking about purchasing a house. So we got him in touch with Justin, got him in touch with our lead underwriter, Phil, and the two of them sat down to discuss this idea of refinancing the property that was coming up for renewal, even though it was like 3 or 4 months away from renewal, refinancing that property so he could get his entire down payment out of that property. He can then rent out that property and get this new property that he wanted to buy without using any of his own capital, without using any money from the bank. And this was and to share a little bit about this guy. He's he used to work for a bank, so he's got options, and he was exploring options. And he came back to us and said, you guys have done due diligence. I can't find this out anywhere else. Nobody is even close to what you guys can do. And this idea of like using the capital that he's already has to reallocate it somewhere else and not use any of his own pocket money, like that's what smart money is doing. This person didn't have to sell their house to get more assets in their name. They didn't have to lose what they've invested in. Their current property that they own is only going to grow in value. Now they have another property on top of it based off the value of the home that they already have. I mean, it's just smart.
Let me bring Brian into the conversation if I can. Brian, thanks for holding. Good afternoon. Welcome in.
It's just smart. Let me bring Brian into the conversation if I can. Brian, thanks for holding. Good afternoon. Welcome in.
Yeah, thank you.
You got to turn your radio off, Brian.
Yeah, thank you for taking my call. Is that okay?
Yeah.
Yeah, you're fine, Brian. Please go on.
Yeah. So basically, we have a second house that basically we have a variable rate mortgage on it. And my understanding has always been that in the long run, if you stay variable, most of the time you will end up doing better than locking in at a 5-year rate. I just wanted to know what your feelings were on that strategy.
Not anymore.
Okay.
Not anymore. We're gonna see something different, and I know it sounds cliche, but like there's so much capital coming into the market, and there's so much weird speak from the central bankers that I am concerned that we're going to see really significant upward pressure on rates. It might not happen in 6 months. It might not happen in 12 months, but they're throwing everything at the economy right now. You know what? If I was to put it in perspective, I think that we're going to see the largest increase in asset prices. We're seeing it already. Like you're seeing it, Brian, in your house price. So the fact that your house price has increased by the amount that it has, it cannot stop interest rate movement.
Marcus, just before we continue, we were talking about fixed rates, variable rates, what the future holds. Tell us a little bit about Connect. What makes it different? I started the hour talking about it, but I want you to have a chance to explain to the listeners why Connect is so special to you guys.
Simple. One message to our borrowers, one message to our investors. The same message. Help Canadians figure out the best way to get their debt and help Canadians find the best way to put their savings. That's it. It's like what did we call the bird last week, Iain?
Oh yeah, what was the bird? The
That was like an ox.
I'm not guessing. I'm not guessing at
the oxpecker. That's what it was.
Oxpecker.
There you go.
All right. So listen.
But a good guess, Matthew.
Yeah. Connect does one thing. Like we exist because of the bank's inefficiencies. So if you think that the Canadian banks are operating with full efficiency and that they have everyone's interests at heart every single time they make a move, then you know what? You don't need Connect. But if you think that perhaps the Canadian banks might not fully understand your situation, they might not be providing you with the full savings that you might be able to receive on your debt or the full return that you might deserve on your capital, then maybe it's time to ask someone else a question about that. And I hope that it's Connect, but if it's not Connect, let it be somebody else. Connect is a company with a group of well-curated, salaried employees who we don't necessarily all start with the full breadth of knowledge in mortgages, but it's my job to make sure that I find really amazing people and I educate them and I help those people help other people. And I'm going to keep doing it. And I don't even think the banks know that we're doing it, to be honest with you. Like Connect will do $1 billion worth of mortgages. We'll have tons of investors call us on a daily basis, and we won't even make an impact in the balance sheets or the income statements of the major Canadian banks. So avail yourselves of our services. Like contact us, contact somebody. Just don't continue to be one of the Canadians. And I said this on our first show. There's $1,000 of after-tax money coming out of every single man, woman, or child in Canada and going into the net profits of the Canadian banks. In order to fathom that, like Liechtenstein or Luxembourg, like the Cayman Islands, countries with incredibly powerful, profitable banks, they could only hope for that type of profitability. And that profitability is on the backs of Canadian consumers.
Mm-hmm.
So
I was going to say the same thing.
We're one source. We're one source of information for you.
Look at when you look at what they say, like the big five in Canada, you look at how big of these Canadian banks are players in the international market. Look at banks like Nova Scotia and how they've expanded into South America. How did they do that? These other banks don't expand into Canada like that. They don't come in with the same footprint. How are these Canadian banks able to have that footprint around the world? It's off of our backs. It's off of us paying fees, us like the Marcus describing how we pay to break our mortgage and America doesn't. Why did they do that? Because Canadians, we won't even argue about it. We don't even educate ourselves on it to be able to get mad about it. Are you kidding me? Like, there's so much that on you right now, the listener. The responsibility is on you to educate yourself. get in contact with us and let us help you, guide you through this process, and then start telling everybody else about it.
Guys, I have a text message here I want to make sure we get to. Hi, it's Rose. Love your show. I have a mortgage coming up for renewal July 2022. I'm at a fixed 5-year, 2.34% term. My mortgage is a little greater than $600,000. I've been with my bank forever. Should I be looking to exit my mortgage early, or should I wait until I can begin looking at a new term when I'm not going to incur penalties?
I'm going to let Justin take this.
Yeah, I was gonna say, like, you know, it's always a good time to at least talk about it, right? So if it's not the good time to break your mortgage today, which, you know, it probably will be, there's much better rates on the market, and you know, depending on who you're with, there might be some tips and tricks for us to kind of mitigate some of that penalty cost that you're going to have to pay entering into a fixed rate. But if it's not the right time, it's worth the talk, right? So you know, I would say, you know, just give us a shout. We can walk through the numbers with you. I would love to just, you know, I'm not as good as Marcus with off the top of my head math, but there are some, you know, and there are some numbers that I'm going to need from you to figure out what that penalty is going to be. But, you know, a quick conversation is all it takes. And so give us a shout. I'll take your call right after the show, and we'll do it right now if you want. So
you want to follow up, the phone number to do that is 416-766-2666, 416-766-2666. Rose is mentioning her renewal, mortgage renewal coming up July 2022. During the last segment, you were saying that you're getting in touch with clients whose mortgage comes up in a few months. When is, two things. One, when is the best time to start talking about this? And I guess the second thing that really came out of your last answer was ask. I mean, you guys aren't going to be offended if somebody picks up the phone just to ask you the questions.
How about this? The longer you wait to find out whether your mortgage is in the money or not in the money,
bless you,
the better a service you're doing to your bank. So the sooner you get informed, the more comfortable you're going to be, and the less comfortable your bank is going to be. So I'll put it to you this way. We start our communications with our existing clients 18 months prior to their maturity.
Wow.
That's when you get your first email to tell you what the rates are available in the market.
Guys, I literally have 1 minute left. Can you tell, why should people pick up the phone and get in touch with you, or go online and get in touch with you? You got a minute.
Get comfortable. Get comfortable with your mortgage. Just get comfortable with it. And you know what? I'm paying for all of these people to answer the phones. You have nothing to lose. Like, you're literally just phoning in.
Well done.
I've literally picked my most favorite human beings to work at this company. Right? So there's about 30 people, all of which are amazing. All of which I know care about every single person when they call in.